Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Good morning, everybody.
Good Friday morning. The dogs are excited.
The dogs are barking this morning on this beautiful day. I have a Saint Bernard Mastiff. For those who like doggies, look up a Saint Bernard Mastiff. Imagine a Mastiff and a Saint Bernard mixed. Just a giant dog.
Troy, how much does your dog weigh?
About 200.
Are you serious?
Are you serious?
Yeah, he's a big one.
Is there any way is he in the house?
Yeah.
Can we see? How big is?
Let me see real quick. I don't know if the internet's going to go that far. No,
Okay.
The internet's not going to go.
We'll have to do
a
a special guest feature though. You need to like bring some raw meat and tempt him over to the camera one day and see if we can get him. We'll give him like a recommendation, puts or calls, and let him bark, and that
Like
can
a
maybe
turtle.
be a
Like a
that could be a
turtle.
signal. We could put that in Trading View.
He's a
Run the
sweet
CSV.
boy. He's a sweet boy, but I don't know if I trust him with trading. Put it that way.
But if you say the word VIX, you could tell he's been trained well. Then he'll
That's
bark.
it's like the German police commands. They have VIX, contango, backwardation. Those are the three.
Now, what's the temperament of the dog?
He's great. He barks. So when he's outside, he barks at basically everything that could possibly ever go wrong for our family. But the temperament of those dogs is great. We got it when the kids were real young, and he's great with kids. I mean, he'll just let kids just sit on him. He's a really good temperament with kids. Basically, they were designed, Mastiffs at least. St. Bernards are designed to rescue people. Mastiffs are designed just to look really scary and literally sit on your porch. I think that's what Mastiffs are designed.
So they're they're very gentle.
Very gentle. So, anywho, he's going to bark on and off. How you guys doing this morning?
Yeah.
Friday morning,
Good.
Markets at all-time
Doing good.
highs. Dan, how you doing?
Yeah, that's right. Markets at all-time high. VIX is going to get in the 14s a little bit here.
Oof.
So, another up week. It gets kind of tiring after a while saying, okay, now we're at market highs. What should we do? And then the next week, now we're at market highs.
But VIX, here's what was interesting yesterday, Dan. We're at all-time highs, and VIX was like, it opened down. I'll have to look.
Yeah.
But when I was watching it during the day, it was like up during the day. Like, are we kind of,
A little bit,
not dramatically, but
VIX will give you what it gives you. Like, this is the thing about it. It's interesting. It's not that, it is obviously correlated to the S&P, right? Obviously. But it's not correlated to price. And so what it does, it's not linear in the sense of like market's up another 5 points, vol should be down. It's like it gives you what it gives you during the day. And so if you're up 20, that's kind of what S&P, that's what you're kind of getting you're getting in VIX. Like I think we're down 40 cents or something like that. But it's like it's not really going to go lower than that, even if you get up to 60.
And you make a good point. At this point, it's like Custard's last stand. When you start getting in the vicinity of 15 in VIX and below, now you're going to get stuff you're not used to. You're going to get, okay, market's up 10, VIX is up. Market, it's going to be a much more of a fight. Now, today's Friday, so you naturally have usually more sellers. So if the market's quiet, and it looks like there's a good potential wrestling match here, isn't there? Because you got the big number, 6,600, possibly. So that could push the VIX down a little bit more.
And news, isn't there? I think there's news at in preliminary Michigan. I mean, it's labeled red on Forex Factory, but there's the University
Michigan at 10. Michigan at 10 sometimes will do stuff. Sometimes. I mean, it's, it'd have to be like pretty ridiculous to stop the train.
Yeah, I think all eyes, don't you think, at this point are the obvious, when, the next catalyst. Like we had a couple catalysts this week with the inflation reports. One moved the market a bit, right? One didn't, right? The one that came out, was it Thursday morning? The CPI or PI, I forget which one is it. But next week, Wednesday's big kahuna from, in a way, the Fed stuff is, you say it's the big kahuna, but then it's interesting. You have a number where you can look at the CME and say, okay, there's 100% chance we're going to have a cut. I guess the only wall would be as if they did more than a quarter. Am I right?
Right.
And one of them even mentions RSI 60.
Yeah, the RSI 68. Yeah.
Big number.
Big. Yeah. The interesting thing about the Fed too is that, like, I was actually watching a long time options trader talk about like the dates and they were talking about how over the years the dates that mattered have really changed. And just as a quick aside, in option Omega, you can backtest any date you want, and you can blacklist it and you can whitelist it. And we get asked, not all the time, but we've been asked, hey, will you put these different drop downs? I want to test this. And the reason we don't, there's two reasons we don't. Number one is just cleanliness, complexity. The more stuff like that you add, there's significant chance of it having second order effects. But the other reason is this: you can already do that in 2 clicks. And people who do that just have their own tracking of whatever event they want to test, whether it's Tesla earnings or CPI, or if Mercury's in retrograde, and they just copy and paste it in there. And the thing is over the years, what people care about now weren't what people necessarily cared about in 2018 or in 2022. News matters more in a high VIX environment than a low VIX environment. There's all these other factors. So it's interesting to me to watch this trader talk about how when she was doing 0-day options in 2020 or 2018, because there was still 0-day in 2018. It just wasn't every day. How the different news things just had a completely different, priority and a totally different impact on the market. And now, the 2 clicks, Foxy, here's what it is. Somebody said, I need to find these 2 clicks. I'll explain it. This is what most people do. It's just a spreadsheet. Keep it updated, copy and paste and select dates. That's all people do. And there's a bunch of them floating around the Discord. If you ask, you'll find it. There's just about every variation of the rainbow that you can find. You can find a color on that in the Discord. So just post that in the Discord and somebody help. Actually, a lot of them have even been tagged and bookmarked and all that kind of stuff. So,
man, I'll say this just for the years of trading, it amazes me. I mean, that's one of the, if you said to me, the many huge benefits of using the back testing and with Options Omega, what I love is for years, and you get this all the time, we forget things, right? And I'll ask students who say, okay, CPI's coming up. I'm not trading. I'll say, do you remember what CPI did the last time? No,
Right.
of course not. But it's like Archie Bunker. I'm not going to do it. Or this,
right.
It's so arbitrary. I'm like,
Right.
why wouldn't you want information?
Right.
And to go back and you can see any date, like NVIDIA, people like freak out because, and we're all like that. It's like, we remember, it's interesting. In baseball, you remember like Dave Kingman was a big baseball home run hitter in Chicago. People like, he was the best. He had maybe a 170 batting average. But they just remember these home runs.
Yeah.
And we remember the NVIDIA earnings where it took the whole market. and we forget the ones where it doesn't. And so I'm like, what a wonderful
survivor bias.
what a wonderful thing for the back testing. That's, I mean, that's where we screw up a lot. Well, we're not going to play here. We're going to play. And it's like, hey, you know, when you first told me, you guys, when you started the back testing and we were talking, and like, and I've been trading for quite a while, but it's like, well, this Thursday, what was the day, Matt or Troy, that you don't Thursday, you wouldn't put on like a,
I mean, I am less likely to put on credit selling spreads on Thursday for zero because of Thursdays, just the way Thursdays worked over the years since we've had zero DTE, the 3+ years now, that outsized moves often happen on Thursdays.
But see, that's the thing is you bring sanity to the equation, the classic money ball where, wait a second. Yes, because we're jaded by, not only jaded by our bad memory, but if I did something on the NVIDIA earnings, a range bound trade, and I lost, I'm going to swear off in my mind, I will never, ever trade NVIDIA earnings again. And the next 7 NVIDIA earnings could be nothing. Yeah. So it's like sticking with the data, because if we stick with our emotions, it's going to be anytime we have a bad experience or we lose, that's coloring us. So
Thursday, Thursday, you know, it's the scouts are coming in telling us, listen, Thursday, it's a great day. It's after hump day. You're going to want to put an iron fly on Thursdays. Yeah. We say we're not doing it. They say, well, look, Thursday's girlfriend is beautiful, has a lot of confidence.
That's right.
We say, well, let me ask you this. Does Thursday get on base? Wow. And they say, no, it's been striking out. Wow. Thursday doesn't get to play. That's the thing.
So, you know what? See, Matt, he just said it so much better than I could.
Perfect.
No.
Perfect. It's on base.
It's on base. So speaking of getting on base and striking out, we have been looking at we started calendarized flies. Shout out Louis Shift, changed directions a little bit, started looking at Friday flies. I'm going to give you a test now. I'm going to speak personally for a second. I'm going to give you a test now that I've been trading and have stopped trading. And maybe you can understand why once I show it. But I'm going to show you a test that is still theoretically a good test, but has been a bit of a downer. I give you, and I don't know if I can solve this or not.
Okay.
I don't know if we actually can improve upon this or not. Usually on Fridays, I like to give you a feel-good story, go home, here's a nice looking test. This one, this is like Twin Peaks. The mystery continues going into Friday. I don't know. So here we go. I give you the 1 DTE iron fly.
I've got strong feelings.
Matt's
here we go.
Perhaps seen this trade before?
No, here's all I saw. I saw 2 things. I saw 1 DTE and I saw 10-15.
And what bothers you there?
I have tested and traded a lot of 1 DTE 10-15, and the slippage that I've experienced, there's just this nuance. It can be kind of high.
Even 45 minutes after the market opens.
Yeah. It's just at this minute. If you test this at 10-14 and 10-16, I don't know. I've not seen this exact test. I have no idea.
I got you.
Are there significant differences? And I mean, here's the other thing. The capture rate's anemic. So if you have a 0.5% capture rate, now I understand, and we're not looking at the trade log. I understand this is a 1 DTE out, potentially 100 wide iron fly. So like, and I'm not looking at the test right now. I don't know if okay, that's not bad. That actually raised the capture rate. That makes me feel a little bit better about it.
By 1 minute, wouldn't you say, but don't you get, like you guys are saying,
usually
by 1 minute, would that be like, what's the word? Curve fitting?
Yeah. Usually there's not. So the times that I avoid back testing are these times. 10 o'clock, 3:50, 2:30. And it doesn't mean the back tests are bad. They're just those times are noisier times.
Eastern time.
Yeah, and listen, I'm in real time being proven wrong because his capture rate is very similar. It's going up the minute before and after. So consider my objection.
Well, this is where true. This is where true. This is where two ninjas of the option omega world. You get to see the fun part of the we usually are completely aligned, but I myself also have the ninja power that Matt has and knows about Magic Minute as well. So as someone who's traded this, I knew that was going to be the case. And I would have never ran it if I knew Matt would be right.
I've just seen 1015 on 1DTE have issues before, but this one does not. I mean, here's the thing. It is a low capture rate. It's a low capture rate. The metrics are okay. You lose as much as you win, basically. And there is the potential for your big loser to be a lot bigger than your big winner. So I don't love that setup. But I do love the idea of not trading a 0D, not trading a 0 DTE expiration, but exiting it at 0 DIT. Like as a concept, I love that. And I like the Batman hat that this chart makes. I like Batman.
What do you mean the chart? Where's the chart?
Yeah, if you look at the trade log, it's Batman. It makes a Batman. So I mean, it's better with the Batman, and then it goes up again at the end. But I mean, Batman was probably my favorite DC hero. I wasn't really into comics that much, but anyway, that just whatever. What did you just do?
Well,
did you full port it?
No, well, no, I was full porting it already. This is what I did. I mean, I'm not full porting it. I'm saying the test full port.
Yeah.
This is what I did. This is about when I started trading it. This is
what you cut out this year.
This year has been terrible for this trade. So I'm just going to show you real quick.
Yeah.
Let's run it year to date and show you So it has not been a good trade this year.
Yeah.
But here's what's crazy, Matt, this is the thing. I will say another ninja in the space has looked at this trade with me before, Rusty.
Okay.
That trade actually has a lot going for it before that, because it's not to dailies. That was going back to 2020.
Right.
Like this is a long test with over 500 occurrences. So
I mean, it's got a ton of rails. My experience trading 1DT, I would probably also have higher exit slippage. And when I see something that has a really low capture rate, it's super sensitive to exit slippage. Now,
well, don't worry about exit slippage for a second, because I want to talk about just the structure for a second.
Okay. Too in the weeds. I'm too in the weeds already.
No. I mean, I know what you're saying, but
all right, it's a $40 trade sometimes. Yeah, that's what I thought.
You're collecting different things. Now, here's the thing.
Yeah.
You're only doing it when you have 20.
Yep.
You collect $20, right? And so you're collecting a lot of money, and you're getting out for various times because you're getting out
all different rails.
You're getting out a minute before MOC comes out.
Yep.
The 350.
Yep. Or deltas, or price move.
So you have a lot of
target.
You have a lot of rails, but a lot of occurrences. I would venture to say, I'm going to go ahead and say it on the record.
Say it. I
actually think if you looked at this test pre this year, this would, I have no, I mean, I said I was going to show you one Friday. I think this is probably one of the best 1DT flies you could do.
Yeah.
Now, here's the question about structure. Matt's right about slippage, all those things. You'd have to trade it to figure it out, right? With 1DTE. But what I'm interested in is, why do you guys think a 1DT iron fly that all it did was win for 4 years? Why did this year break it?
Now, but you're saying with this exits, right? So, that's the exit. When I got you. Okay. Why did it break it?
Why did this year trading this suddenly not work when it had worked so well? I mean, again, to show you I'm capturing a little bit of the drawdown at the end. You had a drawdown in 2024. But overall, this, and again, this is full port. I mean, this is showing you the extreme of it.
Which,
a 12 MAR 33% drawdown over 4 years with 100% port is a good test. I'm not saying it's a great trade, but I'm saying that's a good test.
Well, you think about this year first. I mean, to me, if I'm going to answer any, why is it not working this year? First, I'd want to analyze. I'd take a quick look at, okay, the two things that could affect this trade: price and vol, right? I mean, that's it, right? So price for the year to date, other than, you've had, March and April, especially April, you had that down period. Before that, it was pretty stable. And then we've been slowly trending up. April, May, June, July, August, the last 5 months, right? So I'm just trying to think, unless you had some overblown losses this year, and was April the death of this thing this year? Or I don't know, but you had exits to get out of it, right? So
and you were getting a boatload of credit. I bet in April you were getting what, $70 credit?
Yeah.
Let's see how good my guessing is.
Well, the thing is, this is a short delta. Should this have been more? Is it because
$80 credit? Jeez.
You're Troy, you're not in this one. Wouldn't the results be different if you would have just tweaked it a little bit? Like maybe have the short strike instead of at the money, a little bit of leaning long delta, right? Because this is basically an up market. Well, no, you've had some other up markets. I don't know. I mean, my thought is correct anything and make it long delta and it'll work, right?
Yeah, that's right. That's right. No, that's a good. Now also notice that we're doing exactly what we said before. Thursday seemed to move the market.
So you're staying away.
Trade going to 2020 hasn't worked. Let me do one more thing real quick because I want to see in real time. My memory's coming back a little bit about some stuff.
Or would you check?
Let's do a min RSI and see what this looks like.
Oh.
I don't know if it's going to work or not work. I don't know, but trying to figure out what is the key.
Yeah. And while we're talking that, Rob has a comment about running it as a one lot. Rob, I ran it as a one lot as well. I got different numbers than you did for year to date. The numbers I got were like very slightly positive, but if you look at running it as a one lot over since 2020 and you look at the trade log, it literally killed it every year except this year.
Oh,
it's very stark. Like to your point, running it as a one lot. Rob's saying that this year Thursday was the day. Hey, maybe we curve fitted ourselves out of it. Maybe we should have had Thursday back. And you might be right. Without Thursday, this year as a one lot is a 0.19%. And that's without me hitting the slippage. I just, on a $70 credit or whatever, I just don't think 10-cent slippage is enough. Even on a $40 credit, that if you think a slippage is a percentage, it's such a small percentage. But to the point, Thursday may be worth looking at. And the overall point, I mean, no matter how you do it, 2025 has been an aberration for the previous 5 years. It's been different.
The chat's in it this morning and I like it. So we're gonna do something. Let's see what it looks like if you calendarize it back. Wouldn't that be awesome?
Oh my goodness.
Somehow
real time.
Let me make sure I run it back. Let me just do year to date and see what happens. Oh boy. Oh boy.
Well,
Johnny. I mean, listen, anytime you go from negative to positive, you
that's
just
true.
That's
true.
Stop and celebrate for a second.
Yes.
I mean, how many times have you run a trade? Listen, I don't know how many hours in my life I've spent running terrible back tests, and you get to green and you're like, hey, we're on. Hey, there's a sliver of hope.
Yes.
So all this did is just get you just put the longs 2 days out. Okay.
Yeah, 2 days out. Now I'm going to go back. I'm going to run this.
Well, because you're getting quicker theta now, right?
Yeah. I'm going to run this dailies just to see. what it looks like. I mean, okay, yeah, that's full port. Yeah, let's do a one lot. I think Rob's right here. I always like doing one lots. Rob's my one lot king.
Yeah.
And I appreciate that about him because I too run one lots all the time.
We need to do a whole show on the difference with an example and then clip it. And then whenever somebody asks about it, we'll say, here's the pros and cons of each.
Yeah.
I mean, this is just a short straddle, right? I mean, the longs are, what are you paying?
Those
longs, even 100 points out 2 days, they can't be much. I mean,
this is what I actually think the answer is kind of in what Dan just said. I'm going to take away from the screen for a second. We're going to have some real talk for a second. This is the beauty of backtesting and all of these things. Like Matt is dropping what I would like to call, the children call alpha, and explaining how slippage works, explaining the mechanics of backtesting. Like, don't get caught over optimizing a backtest and not making it real life. What Dan just said is the structure of the thing, which actually makes, if you take a 10,000 step foot back, why is a 1 day DTE iron fly breaking this year? Because we had a lot of event driven news intraday. Like it's that. So you're trading a synthetic short straddle. Synthetic meaning just you are just buying the longs for margin, basically. They're not doing anything for you. 100 points out ain't doing nothing for you. So you are selling a synthetic straddle, and therefore you are losing money if vol gets popped real fast. Well, what happened the first 6 months of this year? Vol got popped all the time.
A lot.
With every tweet, with every news event, with everything that was happening. You think about this first 3 months, we were at all-time highs. Suddenly there's like, hey, Ukraine. You remember the Ukraine press conference? It was a Friday where they're just like, him and Zelensky got into it. Vol popped. That's just another day. You can't blackdate that. You can't listen. Like, there was 4,000s of those things happening the first couple months of the year. And so anyway, we can return to normally scheduled programming, but just when you're like, I don't know, these filters aren't working. What is your structure?
Yeah.
And what does your structure have inherent weaknesses and strengths in?
And what does your structure have? Like, even when, okay, you're basically selling a straddle, right? For all essential purposes. The wings are keeping your margin under control. But by selling that straddle, what is that? A good part of the year, like you said, very high vol. But part of the year, since May and June, lower volatility. So how does a low volatility, less premium affect a short straddle? Well, you don't get as much room, right? I mean, you look at a high delta short straddle right now. I mean, what do you get? 20 points? I mean, you don't get much room. And if you have, you're in it the wrong day, you're toast. I mean, I like the deltas, but you're right. It's just focusing on, you're short a straddle. And that's the other thing. So this worked the previous 4 or 5 years, Troy. So a short straddle basically worked, right?
And probably what happened, to be my guess, is you had the market in the previous 4 years. Yes, things happen, but they're not little skirmishes. They're big things that are happening. And so the overpriced market is going to price for a day and not for an hour. I mean, go ahead, Matt.
I was just thinking, here's a phrase. I don't know if I've heard anybody say it, but how about this? Jumpy market. Jumpy intraday.
I like that.
A jumpy market.
Yeah.
People have said on this show right now, people have coined the term jumpy market. So intraday 2025 has had a jumpy market.
Liberations and tariffs. Yeah, jumpy.
That's right. And Zelensky on the mic. And every possible thing. Troy's showing us some modeling.
Flash the beauty, Troy.
Troy, what do you
this is what I was going to say. what is an iron fly? What is a synthetic straddle? You want the price to basically do nothing.
Yes.
And you want vol to go down. Bonus if vol goes down, and otherwise just collect the money. Just collect them, and in this type of trade, you're getting out about right there. You're getting out about right there, right? Yeah. And what you want to have happen, and you want to have happen is that you want vol to go down. Yeah. Now think about this market. You put this on, we're somewhere there, and then hey, some crazy tweet or press.
Yeah.
Just a little
press
bit,
conference.
2 points. Well, you're out. You're out at that point.
Yes.
Like that's how quick it can happen. Yeah. In a jumpy market. I think jumpy's the key. I think.
Hey, real quick question: is there any chance out of the 5 years that you ran this, what year was the best? Just curious on this.
I'd have to look. That's a good question. Let me go back to the original here real quick.
Just to highlight. Okay, what was the ideal short straddle environment?
I'm gonna say probably. Let's run. Let's run 24. Let's run 23. It's 24, sorry. Okay. My guess is probably that one.
Wow. That's 24, Troy?
Mm-hmm. My guess is probably that one. I could be wrong, but
is that drawdown? I mean, when you look at drawdown, what is that? I mean, obviously the Mars, but what is that?
Yeah, but he's full porting it too. So.
Oh yeah. Okay.
So if you were going to do this, I mean, yeah, can you run this as a one lot too, Drew? And we'll just. The chat is lit today. Chat is lit. Shout out to the chat.
Yeah.
Here's what's not lit today. Futures, very boring, flat.
Yeah.
Nothing. VIX up 2 cents from close.
Yeah.
So not bad. I'm one lot. I mean, that's kind of what you'd want from a one lot,
Again, I have a knee-jerk reaction when I see a capture rate of 3.3%, but I have to remind myself you're doing a huge credit 1 DTE.
Yeah.
So,
yeah, you're just not going to capture a lot of it.
Yeah. That's what Rob, your comment. That's why I'm talking about the capture rate rather than any of that stuff. I'm talking about the capture rate. I will plant the flag on the hill that, that 10-cent slippage is not nearly enough for something like this, which will have an impact on capture rate because you're selling. Shout out to Mark Anderson. I've heard him talk about this before. We talk about slippage usually in absolute terms, but talking about it in percent terms has a lot of value too. And if you have a back test that's an $80 credit on 100 wide,
that's right.
10-cent slippage is not a big percentage.
That's right.
Yeah.
That's right. What would you put in this type of trade, Matt? What would you put maybe entry slippage?
I think entry slippage, I've traded similar structures before. I think the entry slippage is less of a concern than the exit slippage. I think by the end of it, now keep in mind, I have different slippage. Everybody's slippage is differently. You're different, their experience is different. I think I'd probably go 15 cents on entry, but my big thing would be on exit. I would probably go 50 cents. Like I would want to punish it.
I agree with you. I mean, if you're getting, especially if you're getting out of this, think about if you're getting out of this and it's going against you.
Yeah.
Right.
And on a 1 minute,
that's not unusual.
On a 1 minute, you can have some big movers.
Absolutely.
Sorry, on a one DTE. Yeah, on 1 minute, on 1 DTE, you can have some big movers. And the other thing is your profit target is very rarely going to get hit, right? I mean, I don't know how often the profit target gets hit, but I think it's a pretty infrequent occurrence when the profit target gets hit. So, that really makes sure you're going to hit the profit target. And actually, if you'd use that much exit slippage, you'll probably hit more profit targets in real life, which is how you want it to be. You want a realistic back test, and any deviations, you would rather beat the back test than lose to the back test. That's kind of the design philosophy. The idea is to make a robust, rigorous back test. If there is a deviation, you hope that you beat the back test. And that does occasionally happen. But that's kind of the design philosophy.
Do you guys remember with this at all, Troy, when you were doing this, or Matt? Because I'm just thinking, when you sell that, you're selling the at the money. And so it's just, right out of the gate, if we're even slow for a half hour, that thing is just collapsing, right?
Yeah.
Oh, no, you're selling the 1 day. You're selling the 1 day. One day.
It depends. I mean,
yeah, that's a good point. Yeah, I keep thinking 0 day, if we're quiet for a half hour, it's just being torched, the extrinsic value. But here it's a 1 day. You're getting it, but nowhere near the speed, right? So you need more time.
It becomes more of a vol play. Because when I was trading that with the 1 DTE, I would notice on days when my DCs were doing really well, it wasn't doing anything. The iron fly wasn't collecting anything. We weren't getting any theta out of that sucker. And so, and anyway, you guys play around with it, see what you got to do, see if you can solve the mystery of it. My theory, and this is kind of my thesis for today, is sometimes it's not a great time to trade an iron fly. And that's okay. That's all right.
And then, you bring a great point that sometimes, this isn't, I still remember this image in me. I was going down to the Chicago Board Options Exchange. It was busy one, and I had to get down there at like 6:30 in the morning. So I go down there at 6:30 in the morning, and I see all these construction workers out there. They had a good breakfast. Hey, I feel good. I'm going to work and I'm going to do something. You go down to the market, maybe exercise in the morning. I wasn't accused of doing that often before the market opens. You get down there, and sometimes the best days in the world do nothing. And I remember guys would come in the pit and they'd be like, yeah, I feel great. And I'm trading. And by 10 o'clock, they're sitting on the stool. They're sitting on the step in the pit saying, why? I came in all ready to go. I had double shot of latte. And I did all these stupid trades, right? And have your plan. That's what's great about the automation is you're not going to do all these stupid, emotional, as many things. You leave it alone. And how much are we, you wonder how much we trade because of emotions, how much we're in front of it. And most of us are born tinkerers, right? So you sit there and, let me just help the deltas a little bit. And, before you know it, it's like, and then you look at the end of the day and you look at the trades you did and say, my tinkering cost $1,500. And so it just, automation is such I think how much it would save people from themselves, right? I hate to, I didn't mean to make an emotional plea.
No.
Keep yourself out of it, right? As much as you possibly can. Yeah.
Quick question. Dan, you were in the pits?
Yeah, I was in the pit, but we didn't have a world-class back testing when I was in the pit.
And soccer sucks.
Shout out to Tom.
All right. We hit all three. Listen, guys, have a great trading day.